A single-family home in Calgary now costs $767,800, a $200 increase from last month, but a $77,000 increase from 12 months ago. Have we hit our ceiling? Very interesting to see, even with the recent 2 rate reductions at the Bank of Canada, allowing more people to qualify for higher amounts in their mortgages, the single-family home sector in Calgary seems to have slowed down a little bit. Let's check that out. My name is Fyfe, your Calgary Realtor. If you're looking at getting into the market, it is so important to understand what the market is doing, what is happening in each individual quadrant, and how you can benefit from that knowledge. Go ahead and book a Zoom call. The link is in the description, or if you want to know what your home is valued at, go ahead, put it in the links below. But let's get into it. So, detached market here in Calgary is actually quite fascinating. To be honest, it's a little bit of a surprise to read this month. I thought that Calgary Housing is going to continue to increase. I still believe that to be the case, but in the month of July, things have seemed to slow down. So let's read what the Calgary Real Estate has written about what's going on in this market. If you want to read it on your own, pause the video, skip to the next chapter. Detached home sales in July fell by 8% as the 15% rise for home priced above $600,000 was not enough to offset the 50% decline occurring in the lower priced ranges. The decline in the lower price ranges reflect limited availability as inventories and new listings continue to fall for lower priced homes. Year-to-date detached sales have eased by just over 1% compared to last year. With 1,100 sales and 1,700 new listings this month, inventories rose to 1,950 units. Inventories are still low based on historical levels, but the gain did help push the months of supply up to nearly 2 months and support some stability in prices. So very interesting stuff to read about how the lower price points is actually what's somewhat causing that slowdown for the benchmark attributes. This chart here, love this chart, has a lot of great information. You can see that the month of June and July, we have somewhat hit a small ceiling. You can see that last month and this month pricing did continue to stay flat. You can see that in April, I was really convinced that this year was going to be another hot year. Q1 and Q2 in Calgary were very hot. There was a lot of activity going on in the first 2 quarters of the year. In May, we started to notice a little bit of a slowdown. No big deal. It was still quite hot, especially when you look at last year. June, we noticed a little bit more of a slowdown. And in July, look at the gap between the sales and the inventory levels. Now, July historically is a slower month, kind of breaks up the 2 seasons in Calgary. You've got your spring and your fall, basically. And you've got a huge gap of inventory. And I would believe that to be some of the stampede, right? They come to the city, they slow down the market, but I did not anticipate this much of a slowdown. Obviously, people are not wanting to spend as much as they thought they might have last year. Look at how much the pricing has increased, $77,000. I think a little bit of people are getting nervous, right? They're buying their primary residence. A lot of investors are having more difficulty finding those properties that have good cap rates and stuff like this. So very interesting to see how this slowdown has occurred. We'll see if it actually lasts the rest of the year, but let's start to break this down. Let's make sure that you realize that each individual property and each individual quadrant has attributes. Even communities have attributes. So the beautiful thing about benchmark is that it's actually tied to these attributes. If you look here, I've actually created this document which beautifully outlines what the different attributes are for those communities. Now, I just want to point out that the links in the description are for your use. The links include a Zoom call, an instant home evaluation, a home search website if you so wish to look. Realtor.ca is also very good. And the benchmark attributes. If you are interested in those benchmark attributes, you can click this link. If you're also interested in reading the entire PDF report on your own, I have uploaded every single PDF report for the last 2 to 3 years. So you can go ahead and you can look back at those different reports. I update them right away every single month. So I'm going to make sure to highlight these links more often. Now, this chart here, or this graph, I guess you could say, I guess it's more of a chart, is the same information just in a numerical value. So you can see that our sales have declined down to almost 1,100, right? Our new listings have decreased as well. We saw a massive increase in new listings in May and June, but in July that typically falls. If you look at years past, it's actually on point. May of last year, almost 1,800. June of last year, almost 2,000. July, it falls August and September, it somewhat stays the same. This year, nothing different. May, June, dip in July. We'll see what August and September bring. Now, the more interesting aspect is the inventory. Look at the inventory. We're up to 19 homes at the end of the month. This is kind of great news, right? It really does help boast that more balanced market. This is what we kind of want, right? At the end of the day, I know a realtor sell, but at the end of the day, the economics is so important for a city's growth, and we want to make sure that we have a little bit more of balanced conditions. We don't want to be in that crazy seller's market all the time because it's stressful for everyone. Realtors, buyers, sellers, investors, and all of the professionals behind the scenes like mortgage brokers, lawyers, and inspectors. So really great stuff. Benchmark price, you can see the exact same as last month. The median price and the average price, look at the dips that we saw this month, right? The median price dropped down to 705, which we haven't seen since January. The average price also dipped down to 803, which we haven't seen to April. So when we recall that written report at the beginning, a lot of those lower priced homes is actually the one that dropped that benchmark attribute, which is very surprising because typically the more affordable product here in Calgary is the more targeted product. A lot of people have moved here for affordability reasons, which we'll touch on the end. So where are all the sales? So this is a year-to-date chart, okay? So you can see that this year, we're very much in line with where we were last year when you look at the blue bar for detached sales. So we're pretty much neck and neck compared to last year. Obviously, we had a $77,000 increase in price point, but when you look at the year-to-date sales, nothing out of the normal there. Now, when you actually start to look at sales by price range, it starts to paint a little bit of a better picture, right? You have the 300,000 price range having the most amount of inventory, or sorry, sales, but we're only thinking detached properties. And realistically in Calgary, you can still find those $450,000 to $500,000 homes, but they really don't exist that much as they used to 2 years ago. 500 and up is basically where you're gonna see all those detached sales. When you start to break down the 7 to a million, we had about 250 in the 7s, 174 in the 8s, and only about 100 sales in the month of July for the entire city. So start to break that down. Now, when you start to look at the market as a whole, you can see that again, year to date, we're actually neck and neck compared to last year, almost 8,000 sales. But look at the difference in sales volume, right? We went from 5.7 to 6.3, right? Like that's a huge difference in volume. And that really goes to show that that price point is increased quite dramatically. Now this is the just the detached market by itself. So new listings, great to see that we've seen an increase from 10.4 to 10.7. Inventories year to date average, right? You're up about, or sorry, you're down a little bit. This is where this chart gets a little interesting just because it's a year to date average, right? You're starting to average all first 2 quarters compared to last year, right? The sales to new listing ratio has dropped actually quite a bit, down to 73%. We're gonna touch on that in a bit. We're still seeing sales to list ratios at about 101%. And I'm gonna touch on that a little bit more in another slide because that is very interesting stuff. And the days on market, technically to this point compared to last year, we're actually a little bit quicker, even though we've seen a slowdown in this past month. So City of Calgary new listings, right? So this is where we kind of need to pay attention because if we're going to see a lot more new listings in the market, we're going to see a lot more inventories. If we do not have more sales, but we have way more listings, we're going to see most likely some price correction. So I'm going to actually have a little bit more of a concentration on this new listings. So this is all the property types in Calgary, but the blue bar is the detached. You can see a small increase from last year. Now, I'm trying to find unique ways to kind of bring in more data for us to consume so that we have a better, bigger picture about what's going on. And these Canadian housing starts from Edge Realty Analytics is a really good base point for us to jump off, right? You could just see the decline in Canadian housing starts compared to 2020, right? We had a pretty nice influx of new homes being built. Then all of a sudden the affordability issues really started to come. And now we're noticing more and more declines as we progress. This one right here is also an interesting stat where you can see that the single family home starts in Canada are actually on a low, right? If you look all the way back from 2015, it had a little bit of an up-down curve, then the pandemic, then it dropped. Now we're starting to kind of bottom out maybe here a little bit for single family homes. Look at the condos and look at the rental purpose builds that we're now seeing in Canada. So there's definitely a shift in the new construction era. But That's only a piece of the pie. I'm going to dive into that in a lot more detail for Alberta and Calgary in future months, so just stay tuned for that. Inventories though. Inventories is again going to be a very key thing for us to watch, okay? Just like sales, a lot of the single family homes are going to be in that 500 plus. Now we had 19 homes left over at the end of the month. This is the total inventory for the entire city. So it doesn't really paint the best picture because 500 and up, you can get into the townhouse market and you can get into the semi-detached market. So it kind of mixes a lot of this data together. Now, you can see that this estimation that I made for the inventories at the end of the month, you had about 400 homes left over for the 7s, 313 for the 8s, and then 169 for the 9s, and then about 1,500 for the, we're grouped together, it was 1,500 homes, all of the 700 to a mil plus, which is accounting for about 36% of the total inventory. So we need to make sure to put that in perspective, right? This is where I kind of talk about that affordability product. That's been a hot topic for me over the last 2 years. Affordable product sells. It sells very, very quickly. Now, I want to point out the 1,900 homes left over at the end of the month. That one graph here that we showcased at the beginning, you can see that we haven't seen 1,900 homes in the last, call it 1.5 years. But when you start to look at things in 2022, you could see in October of 2022, I would have recorded this in November of 2022, we had 1,900 homes for the single family market. We had all the way up to 2,600 homes in June. And then the year before that, we actually had over 3,200 homes left over at the end of the month. So yes, 1,900 homes compared to the last year and a half seems like a lot, but it's actually not that much, especially when you compare to years past. So we are seeing a pretty sharp increase in inventories over the last, let's call it 60 days. But when you start to look at historical data, 1,900 homes really is not that much. Calgary is a very large city. So let's just try and put that into perspective and really not try to try not to overthink this little increase in inventories, because we need to put it in perspective. When you look at the months of supply, this paints a little bit of a different picture, right? So the months of supply is a really good absorption rate. It will tell us just roughly how fast the market will sell out of all the product at the current rate. If you look at city center for the detached market, you can see that they're almost at 3 months of supply. That's a balanced market, right? You shouldn't see a lot of increases or decreases because 3 months is a fairly well lubricated market. Things come and go, not that quickly, but it is moving at a nice pace. You can see that for whatever reason, Northeast is also above 2 months of supply. Still considered a seller's market in my personal opinion, but definitely leaning more into that balanced market where you might not see a lot of shifts, but we'll talk about that when we look at the price changes. And then everything else hovering around that 1.5 months of supply. You can see that East Calgary and Southeast Calgary around 1 month of supply, which is again a very strong seller's market. You look back a couple months, we were absolutely in a hot seller's market, but now we're starting to shift more into that balance where we might not see a lot of price changes as we did not see in the last month's report. So let's start to look at the benchmark prices. Now, I really want to paint this picture as well. I have on first-hand experience noticed a lot of homes still sell really fast. If a home is priced well, has good marketing, and they are receptive to having a lot of agents come through the door and just willing to accept offers on a certain set date, there are a lot of homes that still sell over ask price. So in the month of July, there was out of 1,100 sales, 342 sold over ask, 193 at ask, and 562 under ask. So we're starting again to notice a little bit of a shift to that under ask market, but there's still, a third of homes selling over ask or at ask. So it's still very important that we put that into perspective. If you're going to get into the market, you want to make sure that you're pricing your home correctly, or you're targeting those homes that have been on the market for a little bit longer if you're a buyer or an investor. Now, when you look at this chart here, it looks kind of cool, right? You got city center, you've got west roughly around the same price point, but I'm going to go back to this and say that you need to look at your benchmark attributes and really make sure that you're putting that in perspective, and the links in the description. So year-over-year price growth, super quick, everything's still at 10%. We're still seeing a lot of homes at that 10% increase from last year. Now, is it as growing as fast as years past? No, but it's still at a pretty high increase from last year. So if you want to know what your home is priced at, Thank you so much for everyone who's utilized this system. It's a really slick system. You can use it once a month, once a quarter, once a year, and watch what your home evaluation increases by, right? We're still at that 10%. It didn't increase much over last month, but last year there's a huge change. So if you just want to kick some tires, you want to figure out what your home is valued at, go ahead and use this service. I really appreciate everyone who's done that. I will call, will introduce myself. If you have any questions, you can ask, right? So let's start to dive into this just a little bit more, right? So you see the sales and the new listings here. Look at the sales to new listings ratio. These are some of the lowest ratios that I've seen in a really long time. And the more surprising one that I've seen is the Northeast. But Northeast had 300 new listings, but only 145 sales. So the sales to new listing ratio was under 50%. And yet when you go all the way over to the right-hand side, they still saw a $5,000 increase, right? Again, it's a little bit more of an affordable quadrant compared to every other quadrant in Calgary. Look at the benchmark prices here. You can see that it's the second most affordable compared to every other quadrant, right? You've got your inventories here, your months of supplies for each individual quadrant, your year over year, and then your month over month. So these are some pretty nice indicators at where that quadrant is going. Now, it's not hyper localized for your personal situation, but it gives you a general understanding of what's kind of happening in your area. The best thing you can do after that is just look at the community and figure out exactly what's happening there. So I'm trying to push through this real quick because I don't want to go over 20 minutes. And I might be good with that. So, City of Calgary detached home prices. Look at the red bar. Look at the decrease that we've been on. So this is the benchmark year over year price change. So at the beginning of the year, we were close to 15% year over year price growth. Now we're at 10% year over year. So it's still 10%. It's still $77,000. But compared to the beginning of the year, it's actually decreased for that year over year percentage by quite a bit. So are we going to continue to drop down? You can see the median prices dipped as well as the average price has dipped from months prior. So here is a quick chart just to showcase the last 6 years of what's happened in the Calgary real estate market. 2019, pretty flat. 2020, pretty flat. 2021, small increases. 2022 saw a rapid increase, but then a very quick interest rate increase. 2023, we saw some increases. In 2024, we saw some increases again. Now, are we going to stabilize and are we going to continue these increases in 2025? Probably. Most likely. Calgary is still very well positioned to see increases going into the future. This chart here is also from Edge Realty Analytics. Very good web service. I'll link them in the description. It's an analytics service. They got really good charts there. Strongly recommend checking out their demo. The Calgary the homeownership cost as a percentage from the median income in Calgary is still around that 40%, right? You've got Montreal, which is hovering around 50. You've got Toronto at 80, and you've got Vancouver at about 100. So there is a very large gap in Calgary median income compared to homeownership costs compared to other cities. I would imagine we're going to see that percentage increases as home prices increase, but still today, we are noticing that Calgary is a lot more affordable than those areas. Now, this data, I believe, is from 2023, so please keep that in mind. But there still is a lot of drive to buy Calgary housing, even for investors who are looking at purchasing product here, even though the pricing has continued to increase because there's a lot of growth still ahead. So I've kind of rambled on there a little bit. If you have any questions, go ahead and reach out. Thank you so much for everyone who actually watches these videos. Do not hesitate to ask questions. I'm going to go through this evening and answer all those questions from my previous video. So don't hesitate and do that. Comment below. Thank you very much. We'll see you on the next one. Peace.